Hello, I'm Andrew Gagan. In this week's edition of IG Macro Intelligence, we take a closer look at ASX-listed coal stocks. While coal is a dirty word for some investors, the reality is the commodity is still the world's largest energy source for electricity generation, steelmaking and cement production. Despite rising demand, the IEA is forecasting China's coal consumption will fall in 2024 before plateauing through 2026. This will be the first time the agency has predicted a drop in coal consumption. This prediction comes even in the absence of governments implementing stronger clean energy and climate policies. The Australian government says metallurgical coal markets stabilised over the June 2024 quarter as weather-related supply disruptions eased. It expects seaborne metallurgical coal import demand to hold steady in 2024 before experiencing modest increases from 2025. And it's forecasting Australia's coal export earnings to fall to $70 billion by 25-26 from $90 billion. Coal prices have been on a wild ride over the past few years. Thermal coal prices shot up in late 2021 when supply failed to meet an increase in demand, and then again after Russia's invasion of Ukraine in 2022. Prices have continued to wane in 2024 on increasing supply and the gradual move away from coal as an energy source. The Australian government is expecting prices to decline from $264 a tonne in 2024 to $208 a tonne by 2026. Recently, two unexpected incidents in Queensland have impacted coal supply and prices in the near term. First, a major metallurgical coal rail line was halted after a collision. Analysts expect the incident would tighten the market balance in the near term, which had been slacker given India's elections and seasonally stronger supply. Secondly, an underground fire forced Anglo American to suspend production at its Grosvenor steelmaking coal mine in Queensland. The reopening of the mine may take several months. Also might hinder Anglo's plans to sell its coal assets, according to JP Morgan. Global coal producers enjoyed strong margins as prices rose to peak in 2022. Mining companies used that period to pay back debts, increase dividends and buybacks while retaining some cash. Luke Larrative from Seneca Financial Solutions says whether it is New Hope Corporation or Stanmore Coal, these businesses are in a good position to benefit from consolidation in the sector and to reinvest in additional projects. We're very bullish on the sector, says Sean Hickman from Market Matters, who told Ausbiz, you've got increasing energy demand brought on by AI, and that is going to help stocks like Whitehaven Coal. Morgan Stanley analysts prefer bulks over base metals, saying Indian demand and supply tightness will drive met coal into the third quarter, with the balance to tighten into the fourth quarter. It's overweight Whitehaven Coal, saying it looks cheap on a 12-month forward EV/EBITDA of 3.8 times versus its global metallurgical coal peers. Coronado Global Resources is Macquarie's pick, saying it has a relative valuation to its peers as it has been the weakest performer despite continued strength in met coal prices. It bases its positive outlook for met coal on a slower recovery in Australian shipments to keep the market tight. Macquarie also has an outperform on Whitehaven Coal and has upgraded New Hope Corporation to neutral. And that is your IG Macro Intelligence for today. See you next week.